What is EMA? Understanding the basics, EMA stands for Exponential Moving Average. Unlike the simple moving average SMA, which gives equal weight to all prices, EMA gives more importance to recent price action. That means it responds quicker to price changes and is ideal for active traders. For example, if the price suddenly spikes or drops, EMA reacts faster than SMA. This is why most professional traders prefer EMA over SMA when trading short or medium-term trends. There are different types of EMAs like 9 EMA, fast-moving, reacts quickly. 21 EMA, slower, smooths out short-term fluctuations. 50 EMA, mid-range, ideal for swing trading. 200 EMA, long-term trend direction. But in this video, we'll focus on a simple combo, 9 EMA and 21 EMA, perfect for beginners. What is a crossover strategy? The EMA Crossover Strategy works on a simple concept. When a faster EMA crosses above a slower EMA, it's a buy signal. When a faster EMA crosses below a slower EMA, it's a sell signal. Here's how it works. 9 EMA fast line equals reacts quickly to price change. 21 EMA slow line equals filters out short-term noise. When 9 EMA crosses above 21 EMA bullish trend starts. When 9 EMA crosses below 21 EMA bearish trend starts. This crossover tells you that momentum is shifting and it's time to prepare for a trade. Which time frame should you use? You can use this strategy on multiple time frames, but beginners are advised to start with 15-minute for day trading, 1 hour or 4 hour for swing trading. Avoid using 1 minute or 5 minute if you're just starting. These are too fast and can lead to false signals. How to set up the chart step by step. Let's set up the strategy using TradingView or any charting platform. 1. Open a blank chart. 2. Add the 9 EMA, indicator greater than exponential moving average. Change period to 9. Set color to blue. 3. Add the 21 EMA, another EMA. Change period to 21. Set color to red. Now, your chart has two colored lines. When the blue crosses above the red, we consider buying. When the blue crosses below the red, we consider selling. Exact buy entry rules, long setup. Let's define precise rules for entering a buy trade. Condition 1. 9 EMA must cross above 21 EMA. Condition 2. The crossover should happen above a strong support level. Condition 3. Wait for the current candle to close after the crossover. Condition 4. Place entry at the next candle open. Condition 5. Set stop loss below recent swing low. Condition 6. Set take profit at a 1-to-2 or 1-to-3 risk-reward ratio. Example, crossover happens on 1-hour chart. Entry at 1.1050 next candle open. Stop loss at 1.102030 pips below. Take profit at 1.111060 pips above. Exact sell entry rules. Short setup. For a sell trade, just reverse the logic. Condition 1. 9 EMA crosses below 21 EMA. Condition 2. Crossover happens below resistance. Condition 3. Wait for candle close confirmation. Condition 4. Enter at next candle. Condition 5. Stop loss above recent swing high. Condition 6. Take profit using risk-reward 1-to-2 or 1-to-3. Example, entry at 1.2300, SL at 1.2350, TP at 1.2200.